Hello everyone, my name is Khan and welcome to the new video. In this video, we are going to learn that how we can trade in a counter trend if market momentum is bullish and bearish doesn't matter. If you would like to trade in a counter trend, so what is the process and how many things you need to understand before the buy and sell. In this video, I will show you exactly all things step by step. So this is a very simple and easy to trade thing. When market momentum is bullish and you would like to trade for the short term sale, so you can trade until price tap on your PUI. Let me show you a few diagrams and after that I will show you on chart, then you can understand very easily. Okay, so this is our bullish structure here. You can see if market momentum is bullish and taken out the Indian band, then we are looking for the buy on unmitigated PUI is a mitigation, and those PUI can be your order flow and order block right here. Okay, so in a first diagram you can see here at this point what happened, market taken out the liquidity. When market taken out the liquidity and market push higher, so those liquidity taken point is our become new order flow, or you can say high probability zone, right? It means this zone grab the liquidity. So in future if market tap on that point, so this area become more stronger for the buyers because this zone already grabbed the liquidity, right? So what happened here, market push downside and mitigate this one. So if price mitigate this one, so we can take entry here at this point, and you need to wait for it to take out the lower time frame confirmation before the buy to the upside. Why this area is stronger for the buy? First one is here, market momentum is a bullish and this area grab the liquidity. And the second one is here, at this point you can see this is our inducement. At this point, if market not taken out the inducement, still this area become stronger zone for the buy at this point here. Why? Because this zone already grabbed the liquidity, that's why. Okay, so this is our first process when we can buy to the upside in this case, because this is our pro trend and market momentum is a bullish and everything looks bullish here. Okay, so what happened if you would like to sell at this point right here till this PUI mitigation, till this inducement taken out, because sometime what happened, this can be take a lot of time to mitigate our unmitigated order flow in a pro trend. So you can also sell for the short term. Okay, let me show you exactly how. First one is here, again market break this structure here, again market break the structure, and what happened at this point, this area again grab the liquidity. So if market grab this liquidity, it means this is our next PY when we can expect next buy momentum to the upside right here. So if price came back this point, so we can plan here for the buy to the upside. But before this mitigation here, you need to understand how price reacting after break the previous high. If market continue pushing higher high in this single leg move here, so what happened here, you need to wait for it some lower time frame confirmation, some lower time frame structure confirmation. So if price going higher high, something like this, and this is our structure like this one, because price going higher high in a lower time frame, as well as because market momentum is a bullish. In this case I'm talking about this leg here. Okay, and after that what happened, market price pushing downside at this point and again pushing downside, going higher high, taken out the previous high, and again market push downside. It means market are not able to go higher high, and this entire zone act like a order flow, means the PY we can plan here for this sell till this PY mitigation here. So this is a simple process how you can trade in a counter trend. If market break the previous high, it doesn't matter that market grab the liquidity or close of it. Okay, in a both side this area become high probability zone for the sell till this PY mitigation. So this is the first process, and the next process is here. You can see this is our structure, market take a pullback. Maybe in this case market create structure in a lower time frame and maybe no. Okay, so what happened here, if market break the previous high and sweep this point, if market sweep the previous high, it means this is our indication that market looking for this something push downside, maybe for the short term, maybe for the long term. Because when market break the previous high or low, means sweep the previous high or low, so market gives a momentum to the upside and downside for the short term, and sometime market give a reversal. Okay, so what happened here, if market sweep this one, and you need to follow simple structure here as well as market pushing higher high, push downside, and what happened here, taken out the inducement, we can plan here for the sell at this point and push downside, again push mitigation this one, we can again plan for the sell. You can take two entry here for the sell. Why? Because higher time frame sweep, that's why we can take also risk here for the sell, and also we can take risk here at this point for the sell. So both entry become high probability entry for the sell, because higher time frame inducement, or you can say main high sweep, so we can plan here for the sell till this PY mitigation here. Once price tap on it, So if market create here any bullish structure, so we can plan here for the buy. Otherwise, what happen here? Market push downside and take a small pullback, again push downside, again going higher high. So this zone become high probability zone for the sell. Why this zone become high probability? Because this one is a liquidity sweep here, right? Because momentum is a losing for the buyers and market trying to push downside, taking out the inducement, mitigation and push downside. Okay, let me show you on chart, then you can understand what I'm trying to explain here. Okay, so this is our Aussie USD chart in a 5-minute time frame. As you can see here, market momentum is a bullish and everything looks bullish here. So if market momentum is a bullish, simply we are looking for the buy after taking out the inducement. And also if market break the previous high and create any lower time frame confirmation, so we can also sell for the short term till order flow mitigation, as I explained recently. So in this case, same thing happened here, market pushing higher high, and this was our previous inducement here. And when we are looking for the buy something, because market momentum is a bullish, and if market sweep the inducement, we can also plan for the buy to the upside. And next thing is here, if market not react on this PY here, so we can simply wait for to mitigate our unmitigated order flow is here for the buy. First one is here, if market momentum is a bullish, this is our area when we are looking for the buy, right? After taking out this one, if market failed this one, it means market looking for the some more downside move to mitigate the unmitigated order flow. So in this case, where is our unmitigated order flow? The last selling move before the buy is here, right? Technically this is here because this is our entire move is here and this is a part of this one, but technically this is our zone when we are looking for the buy. If you can check here a 50-minute structure, so you can understand more better that what happened at this point. This is our last selling move before the buy is here. That means price can be tap here. If price tap here, so we can generally looking for the buy to the upside right here. Okay, because market momentum showing bullishness here and everything creating higher high is here, right? So if everything is a higher high, market taking out the inducement, and after taking out the inducement, we can plan for the buy. Okay. At this point, why I was bullish here? Because you can see here the previous structure here, the market momentum was bearish and market sweep the previous low. If market sweep the previous low, that means market looking for this something or to push upside, as I explained. When market sweep the main high low, then market must be create some pullback, and maybe sometime market create a reversal if market break the previous high. So at this point, what happened here? Market push higher, and this is our zone, which is our last selling move before the buy is here, and market push higher and close of it. It means continue close of it. It maybe market push downside to mitigate this zone. So once price mitigate this one, so we can plan for the buy to the upside. So this one is a mitigate at this point here. And what happened at this point? Again, market create some bullish confirmation, and we can again plan at this point. Same thing happening here, market pushing higher high, push downside and mitigate this zone, so we can take risk here for the buy. Why we are not buying below the inducement? Because in a 15-minute time frame, inducement is here. Why? Because just below it, there is no unmitigated order flow. Everything is mitigated here and liquidity already grab here. This is a first pullback after break the structure, so we can plan for the buy at this point right here. Okay. But before this buy, if market create here any lower time frame confirmation for the sell, so we can also sell here for the short term. Okay, let me show you in a 5-minute time frame, because let's check here 5-minute time frame. So what happened at this point in a 5-minute time frame? So this is our structure. The structure is showing bullishness because everything is immediate here. This is our 15-minute time frame, because once press tap on it, so we can see some bullish confirmation maybe, right? But before this buy here, you need to understand what happening in a 5-minute time frame. Okay. This is our first attempt when market taken out the inducement, and once market taken out the inducement, so we can plan here for the buy to the upside. If market create a well structure here for the buy, let me show you what happened at this point. If market pushing downside and break the previous high and push downside, and we can plan here for the buy. This is a very simple process, right? But let me show you how we can identify strong zone for the buy to the upside. This is a very general structure, and what happened that time market failed that a PY is here. Okay, so if market pushing downside right here, and this PY sweep by this one right here, and market push downside and mitigate this zone, so we can enter here for the buy. This looks something like a high probability entry for the buy. And one more high probability entry is here if market momentum is a bearish. Okay, in this case I'm talking about this slide. And then what happened? Market trying to push higher like this one and push downside, again going higher high, break the structure and push downside and mitigate this zone, so we can plan here for the buy. And this zone become high probability because this one is a liquidity taken out. That means those order flow is taken out the liquidity, or those order block taken out the liquidity, those which act like a high probability for the buy and sell zone, right? So let me show you here what happened at this point and how I can take this trade. Okay, so market pushing downside, and after pushing downside, if market create something, if market fail to create something in a bullish structure, so what we can expect? We can expect some sell opportunity, because this one is a fail push downside and we are looking for the sell, because this is our order flow, which one is mitigated by this one, because look at this structure, this one is mitigated by this one and this one mitigated by this one. So once price mitigate here, I need to wait for it to lower time frame confirmation before they enter here for the sell. Let me show you here in a 1 minute time frame what happened at this point and how we can take entry here for the sell. So this is our structure, which one is mitigated here, and main thing is here you need to wait for it to take out the investment in a lower time frame as well as before the buy or sell. So this is a 1 minute structure here, right? In M1 structure, you can see very clearly first market create a bullish structure right here. What happened here? This was a previous low broken and first high is a broken, push downside, this one's a closing, and you don't need to buy here. But at this point, interesting thing is here, market push higher and broke this low and again go higher high. That means liquidity is a grab here, broke the previous structure, push downside, and we can plan for the buy at this point. And this zone become our buy lead entry for the buy, because price taken out the investment and mitigate this one, we can take entry here, put the stop loss just below it, and where is target? The previous high. So this is our entry when we can take here, and this entry hit our stop loss. But as per the structure, as per our rule, this is our valid entry for the buy, because investment sweep, bullish structure shift here, and we can plan for the buy to the upside. But market pushed downside and create some confirmation at this point, because strong bullish confirmation, order flow mitigation, but not able to hold this level and market push downside. It means market looking for something like different situation. What happened? Market push downside, and again the previous high is a break this one, and this one's are called investment. So once market taken out the investment, we can plan for the sell. Why? Because still there is no mitigation of the order flow, right? So this is our investment. So once market taken out the investment, then you can plan for the sell if market create any bearish structure here till this POI mitigation. And what happened if market push downside to mitigate this one and create structure like this one and create any like bearish structure, then you don't need to sell here because the higher time frame mitigation. So if market create any bearish structure without any higher time frame mitigation, so we can plan here for the sell for the short term move to the downside right here. Okay, let me show you here what happened at this point and how we can trade here. Market trying to push downside right here. Okay, because market taken out the investment, and after taking out the investment, probably we are looking for the sell. But at this point, you can see this is our structure like this one, push downside, again higher high, push downside, and this one. So it means this is our structure like this one, right? And then what happened? Market sweep the liquidity at this point, and we can plan for the sell at this point like this one. And this is our stop loss right here. So this is a very simple process because we need to take out the liquidity before the buy or sell. This is important. So in this case, market taken out the liquidity, push downside. So we can plan here for the sell. Look at this structure, first pullback and this one pullback, push downside, liquidity taken out right here. So we can plan here for the sell, put the stop loss just over it. So this is a very simple process for the sell setup here. Main thing, taken out the investment and internal structure must be create a same setup here. Means liquidity taken out, wait for pullback mitigation, wait for stop loss, put the stop loss just over it, and where is target? Target you can set this right. Why this is zone? Because this zone is our higher time frame order flow. Once price tap on it, so we can plan for the buy to the upside. But before this mitigation, if market create any bearish indication, so we can sell, which is create at this point. So we can take entry here for the sell. Let's see what happened next here. Market trying to push downside, and again what happened? Market push downside and upside, and finally market hit our target at this point right. So this area become our strong zone because this is a grab the liquidity, push downside, create multiple like up and down, and after that finally market hit our target. Okay, so as you can see here, this trade is a very simple process. You need to follow very simple thing. Price must be tapped on a higher time frame PY or sweep the investment higher time frame, and then market create lower time frame confirmation, so we can plan for the buy or sell. But you need to understand in a higher time frame, in a lower time, that is our liquidity sweep. If market sweep the inducement, if market like order flows sweep the liquidity, then those area become high probability for the buy and sell. Simple. So I hope you understand that how we can easily spot our area, just grab the liquidity, and those area become stronger for the buy to the buy and sell. Okay. So press tap on it and create lower time frame confirmation and market pushing higher high like that. So this process will be continue if market taken out the liquidity and those zone become high probability for the buyers and sell, right? And this is not happening every time, but you can see most of the time this thing happening. Okay, when market grab the liquidity, then market create something like this one is here, structure broke, previous mitigation, we can buy. Again going higher high, this zone grab the liquidity, pushing upside, this area become buy here. Push downside, liquidity is here, if market tap here, so we can sell. Otherwise, you can see everything is a bearish here. Okay, so right now there is no like sell setup here at this point. So when market grab the liquidity means the against the structure and those area become more stronger for the sell and buy. Look at this one. If market momentum is a bearish and break the previous high in terms of the higher time frame and lower time frame, and this thing applicable in every time frame, and again push downside, so this zone become high probability for the sell because this area grab the liquidity. That's why this one become high probability and sell like. And same thing applicable in our bullish market structure. If market momentum is a bullish and creating something like this one, higher high and taking out the previous low, again push upside, mitigation, and we can buy here without any inducement even. Okay, because already taken out the liquidity. And this thing you can see sometime market works, sometime doesn't work, but mainly when price tap on higher time frame PY and create lower time frame confirmations, and maximum time you will see market going as per your plan. Okay, but always think in a probability. If price tap on PY, if price not tap PY, and maybe when you enter on trade as per your plan, then always you need to think in a probability, because in this world, every strategy is a 50-50% of the probability, because nobody don't know where is market going on. It's all about probability. When it's important, when you are buying and selling, then how much you are losing, right? But main thing is here, when you're winning, then how much you are like winning. Your winning amount always be higher than you're losing, right? So you can see here at this point, again, market pushing downside right here. And this is the last area which grab the liquidity, like this structure. Mitigation, we can buy here, but again at this point sweep here, we can sell here. This is a out of block mitigation right here. Okay, but this is a not means that you need to buy here, because this one is not what we are expecting. We are expecting sell at this point, market push higher, maybe in a different time frame, different situation, but at per the 15-year time frame right here, we are planning for the sell but not created, market push upside, right? And again pushing downside. And if market created something here like this is a structure here, this is internal structure right here, pushing upside and downside, again sweep buy, high sell, break, pull back, sell, push downside, structure sweep here, like the structure shifting, break this one and pushing upside. So if market create something like this one, so we can plan for the buy, right? You need to buy or sell, and you need to think in a both side probability for the buy and sell. This is a very simple thing is here. Like for example, if market not able to go higher, and then what happen here, market push downside and create like this structure. So you need to prepare at this point right here. Don't try to catch this move. You need to focus at this point, because this one is our high probability zone for the sell. Why? Because this one already grabbed the liquidity here, right? So you need to identify which is our high probability. You don't need to buy or sell at the top and bottom, right? You need to catch a continuation move which create a high probability zone for the buy and sell. So I hope you understand that how things actually working in a higher time frame and lower time frame, and which order flow is a high probability for the buy and sell. So I hope you enjoyed the entire video. If you are new, subscribe our YouTube channel and join our free Telegram channel. Link in description. Go and check out, and I will see you on the next video. Happy trading.